Welcome back to Candlestick Signals for today's market, August 4th, 2025. We're about to dive deep into the technical signals that shape today's dynamic stock market. Buckle up, because the last 24 hours have been a roller coaster ride you won't want to miss. From shocking reversals to hidden opportunities, we've got it all covered. So, let's jump right in and decode the market's message through the power of candlestick patterns. Our first stop is the technology sector, which led the charge today with an impressive gain of 6.2%, translating to a market capitalization change of $82 billion. The software and IT services sub-industries were the primary drivers, each posting increases of around 7%. Hardware and storage weren't far behind, with a daily return of approximately 5.8%. Today's session saw the technology sector form a powerful bullish engulfing pattern, clear signal that buyers are firmly in control and pushing prices higher. This pattern emerged at around 11:30 a.m. Eastern Time, coinciding with the sector's low for the day, and set the stage for the afternoon rally. Moving to the basic materials sector, we observed moderate but significant growth. Industry leaders like Newmont and Agnico Eagle Mines posted strong gains of 4.5% and 5.2%, respectively. The overall sector saw a 3.2% increase, equating to a market capitalization change of $24 billion. A morning star pattern formed between 10:15 a.m. and 2:30 p.m. Eastern Time, indicating a potential reversal of the previous downtrend and suggesting renewed investor confidence in commodities and industrial resources. The consumer discretionary sector displayed mixed signals today, with a notable bullish engulfing pattern emerging in major retailers. The sector as a whole gained 2.8%, adding $31 billion in market cap. Amazon, a key player in this space, rebounded strongly, up 4.7%, and forming a hammer candlestick at its intraday low around 11:45 a.m. Eastern Time. This pattern often signals a potential trend reversal, which played out in the afternoon session as the stock climbed to new daily highs. In the healthcare sector, we witnessed a day of indecision and volatility, characterized by multiple Doji and Harami patterns across major pharmaceutical and biotech stocks. The sector ended the day relatively flat, up just 0.5%, with a market cap change of $7 billion. These neutral patterns suggest a period of consolidation may be ahead for healthcare, with traders seeking clear directional cues before making significant moves. The energy sector underperformed today, showing bearish patterns that indicate ongoing weakness. The sector fell 1.8%, erasing $15 billion in market value. A notable bearish engulfing pattern formed in several major oil and gas stocks around 1:30 p.m. Eastern Time, signaling that sellers remain in control and suggesting caution for investors in this space. Financials presented a mixed picture, with a sector-wide engulfing pattern forming late in the day. The sector gained 1.2% overall, adding $18 billion to its market cap. Major banks showed signs of consolidation at key support levels, with Doji candles appearing on their daily charts. This indicates a potential battle between bulls and bears, with the outcome likely to set the tone for the sector in the coming days. Now, let's zoom out and look at the broader market snapshot. The major indices rebounded sharply after last week's sell-off, with the Dow Jones Industrial Average gaining nearly 600 points, or 1.7%, its best single-day performance since May. The S&P 500 climbed 1.9%, while the Nasdaq outperformed with a 2.3% jump. These moves were driven by a mix of Federal Reserve rate cut speculation and ongoing concerns over tariffs and economic growth. Today's session featured several key candlestick formations across the major benchmarks. The most prominent was a bullish engulfing pattern, where a large green candle completely engulfed the prior red candle, signaling a strong reversal of sentiment. This pattern was particularly evident in the S&P 500, forming between 10:30 a.m. and 12:45 p.m. Eastern Time. We also observed a classic morning star pattern in the Nasdaq, a three-candle sequence consisting of a bearish candle, followed by a small-bodied indecisive candle, and completed by a strong bullish candle. This formation, which developed over the course of the trading day, is considered a powerful bullish reversal signal. Additionally, several Doji candles appeared throughout the day, particularly in mid-cap stocks. These small-bodied candles with long wicks, indicate periods of indecision and potential volatility, often preceding significant moves in either direction. The technical interpretation of today's patterns points to renewed upward momentum and trader optimism. The dominance of bullish engulfing and Morningstar patterns across key indices and sector leaders reflects broad-based buying interest and strong reversal potential. However, the presence of Doji formations at various support levels suggests ongoing volatility and cautions against overly aggressive entries. In terms of sector rotation, we're seeing continuation patterns in outperforming sectors like technology and consumer discretionary. These setups signal stabilization and possible breakout scenarios in the near term, presenting potential opportunities for traders looking to capitalize on sector strength. Market sentiment has notably improved after a bleak prior week. The bullish reversal signals in key sectors suggest growing risk appetite, but traders remain wary of policy headlines and upcoming economic data releases. Volatility remains elevated, especially considering August's historical tendency for market swings and the current backdrop of political uncertainty. Let's summarize today's action with a quick look at our performance table. The Dow Jones Industrial Average closed up 1.7%, with a dominant bullish engulfing pattern suggesting a resumption of the uptrend. The S&P 500 gained 1.9%, showing a mix of Morningstar and Doji patterns that point to building bullish momentum. The Nasdaq led the pack with a 2.3% increase, characterized by a strong bullish engulfing pattern that underscores the tech sector's leadership in this upswing. As we wrap up today's Candlestick analysis report, it's clear that we're at a potential turning point after recent declines. Strong bullish patterns have emerged in growth sectors, while cyclicals remain under pressure. The technical picture suggests short-term strength, but warrants cautious optimism amid ongoing economic and geopolitical uncertainty. For traders looking to leverage today's signals, focus on the technology and consumer discretionary sectors for potential long setups, while remaining vigilant for any signs of weakness or consolidation in healthcare and energy. Keep a close eye on the financial sector. Its consolidation patterns may offer clues about the broader market's next move. Remember, while candlestick patterns provide valuable insights, they should always be used in conjunction with other forms of analysis and risk management strategies. Stay tuned for our next report, where we'll continue to decode the market's message and help you navigate these dynamic trading conditions. Thank you so much for watching. I hope this video helped you out. We will see you back here tomorrow. Before you go, please leave a comment, smash that like button, subscribe, and click the bell to be notified when new content is available. The information presented in this report is intended solely for entertainment and informational purposes and does not constitute financial, investment, or trading advice. All opinions, analysis, and statements expressed herein are personal views and are not recommendations to buy, sell, or hold any securities or assets. Market data and any related commentary are provided as is and may not be accurate, complete, or up to date. Neither the author nor the publisher assumes any liability for financial losses, damages, or other consequences resulting from actions taken based on the information contained in this content. Please consult with a qualified financial advisor or conduct your own independent research before making any investment decisions. Investing in financial markets involves risk, including the potential loss of principal. This content is purely for entertainment purposes and should not be relied upon for any financial decisions.